I have many friends who are working professionals and who want to, invest in stock markets. But because they are busy and they think that analyzing the stock charts is a complicated thing, they try to avoid it. Trust me, if you understand this video, you'll actually be better than the 99% of the people who are participating in the markets. It's very simple to analyze charts, but it's our mind that wants complicated things, because we believe that unless and until we do something complex or complicated, we're not going to make money. But trading is actually, analyzing the charts is actually very simple. You can make it as complicated as you want, but the majority of the results will actually come from this simple process that I'm going to share with you. Well, everyone talks about strategies, analyzing the charts, this and that, but at its core, in simple form, it is just demand and supply. There's nothing fancy about it. It's just demand and supply. The main objective of you to be in the stock market is that you want to make money. So when will you make money? You'll make money when the market moves, when there's momentum in the markets. Now, what will cause a momentum in the markets? When the market is either going up or down. If the market is just there, sideways, standing there at the price, you won't make any money. So what makes a market move? In simple words, it's just demand and supply. If there is more demand than the supply, the markets will go up. And if there is more supply than demand, then the markets will go down. It's as simple as it can get. So momentum is our friend, and momentum creates trends. When the market is going up, it's called uptrend, and when the market is going down, it's called downtrend. So let me take you to the chart and show you exactly how simple it is to read the charts. Let's have a look at the charts. Well, we just discussed we need a market that is in momentum, it is trending. But what is the definition of a trend in technical terms? Well, let's say the price is somewhere over here, and suddenly there's an increase of demand which is more than the supply, so the price will start to go up, and at some point the demand dies off, or it is conquered by supply. There is more supply in the market now, so the price comes down, and again after retracing, let's say about 50-60% down, the demand is still on. People are still willing to buy. The people who missed buying here were thinking that the price is too expensive over here. And as soon as it goes down, and because people are interested, they feel that it's a discount. They're getting it at a cheaper price. So they buy more. And because of which, again, the demand increases. Same, the cycle continues, and this goes on. Now you can see, though the markets are coming down in between, the overall direction is up. That is called an uptrend. Now let's look at what is a downtrend. Well, in simple, again, let me remove this. Let's say the price is somewhere over here. The supply has entered into the markets. The market goes down. Some people will be willing to buy over here, so the market rises temporarily up. But still, the supply is intact. People are not willing to buy more, but because people thought, okay, now it is at a better price to sell, let me sell some more. It goes down. Again, some people buy. Again, few people start to sell. Again, it goes down. Up and down. Though you can see there are in between, the prices is going up, but the overall direction is down. So that's a downtrend. To put it more clearly, this is an uptrend. To put it more technically, this is the low of the day. This is the high. Now this point will become the higher low, because it is higher than the previous low. And this will become the higher high, because this high is higher than the previous high. Same, this becomes higher low, this becomes higher high, this becomes higher low. So whenever you can spot a higher low and a higher high sequence, the stock or the asset is set to be an option. Same way, when the prices are going down, we can see this is the high, this is the low, and this is a lower high, because this high is less than the previous high, and then this is a lower low, because this low is again lower than the previous low. Same, this is a lower high, this is a lower low, and that is why it's said to be in a downtrend. And if you're an investor and if you're doing a job and you don't have time to analyze the charts, you always need to go on a bigger time frame, like a weekly or a monthly. Because the bigger the time frame, the longer and the clearer the trend. The shorter the time frames you go, the shorter the trend would be. And sometimes it won't be even clear. So the bigger the time frames, the bigger the trends. And shorter the time frames, the shorter the trends. Only and only if you plan to be a full time into trading, only then you can spot shorter term trends, because then you have to be very quick in executing to buy and to sell. But in longer term, since you're an investor, because you may have a job or you're running another business, you always need to look at a bigger time frame. If you can't spot a trend in a chart, if you see a chart and it goes something like this, that's called a sideways market. That is where usually demand and supply are not in imbalance. Only when there is an imbalance, the market will rally and drop and rally and drop. But if market is majority agreeing at a certain price or price range, the market just remains sideways. There is no trend. And it doesn't make sense to put your money in a sideways market, because the only way you're going to make money is when the markets are trending. Let us look at some examples to get a clear idea of what we are talking about. Okay, this is the chart of Nifty, our index. This is a monthly chart. You don't need to even understand the candles for now. Even if I remove the candles and I just put a small line, you can still, if I zoom out, you can see this is somewhere near 1990 where the index was formed. And you can clearly see from a broader picture that it is an uptrend. Up, down, up, down, up, down, up. You can see in a broader picture it's uptrend. So our Indian markets are going up. Let us take another example, which could be a favorite, Reliance, Mota Bhai. Is there any confusion? But remember, this is on a higher time frame. I'm looking at a monthly chart. You can see over here Reliance, it is written on the left bottom corner, and 1 month. You can see this, down, up, down, up, down, up. It's in an uptrend. Let us look at one more example. Anything which would be, okay, let's look at an example of a downtrend. I think it would be Yes Bank. People still hope to buy Yes Bank. Why? You can clearly see what's wrong with Yes Bank. If I just put it like this. Yes, at this time it was in a good uptrend. But then it went into a downtrend. Now there is no point in buying Yes Bank. This is not a lottery ticket that I want to buy it at 19 rupees and maybe it will go to 400 again. No. Let it show signs of going into an uptrend when it starts to make higher highs and higher lows. Okay, there's one more point which you need to know is, how does a market transition from an uptrend to downtrend and downtrend to uptrend? Well, let's say this is the market that is going into an uptrend. Unless and until this level, previous higher low, is broken, the market will not enter into a downtrend. So no matter if it shows like this, it is still not a downtrend, because this is the previous higher low. Once the markets break this, there are higher chances that the markets will go down. this is how the markets went up, and unless and until this breaks, the market is not going down. Till this broke, the market starts going down, and unless and until a lower high is not broken, which is this, the markets will not resume into their uptrend. No matter if it shows you this is not an uptrend, because the market can go down from here. So unless and until it goes above this, the market is still said to be in downtrend. Let us look at some examples. This is the entire picture. Now let's just plot some. From here, the market was in an uptrend, and you can see this level broke, and then the market went into a downtrend. Now what is the lower high? This. So unless and until the market goes above that, the market is still considered to be in a downtrend, and we have no idea how much more down it can go. Okay, let us understand this. You can see the Maruti was in an uptrend. Now this may look like a downtrend, but remember the rules. Rules are very simple. Unless and until a previous higher low is broken, the stock is still said to be in an uptrend. Was this a breaking? No, the stock did not break the previous higher low. So the stock still is in an uptrend. Now this is the current higher low of the stock. So unless and until that breaks, we are still a bullish in Maruti. Okay, for those who do not know what bullish and bearish means, bullish means the stock's going up, people are positive about the stock, and bearish means the price is going down, people are negative about the stock. Because the bull always attacks with its horns up, and the bear always slams to the ground. Again, do I need to say anything? It's very clearly evident that the stock is in an uptrend. I don't even have to say anything. You can look up, down. For the most of the time it just stayed there, but then again up. These are all great stocks to buy. Never buy a stock which is in a downtrend, such as Yes Bank or Vodafone and Idea. Let us look at other stocks, which could be Wipro. Again, there is no confusion. Though it may look like the price has come down a lot, no need to panic, because unless and until this low is broken, that's the higher low. Unless and until that point is broken, the stock is still said to be in an uptrend. And trend is your friend until it bends. Always go with the trend. Never go against the trend. Yes, analysis is as simple as this. We go to... Okay, let's go here. Let's open this up. And let's just go one by one. Okay, this is Adani Ports since its inception from 2007-2008. And you can clearly see this is an uptrend. So unless and until this higher low is broken, the stock is still in an uptrend. Let's go to Apollo Hospitals. Same story. Unless and until this or this is broken, higher low, it's still in an uptrend. Let's go to Asian Paints. Okay. Now Asian Paints, let's see something, which is, let me just first remove the drawings. If you're still confused that how can this be so simple, well, it is. It is so simple. Because this is not rocket science. This is just investing, trading. It's supposed to be a game of patience, not a game of analysis. You just analyze to get the best possible entry, and you enter the markets and you just wait. Let the markets do its thing. Let the demand come in, let the supply come in. You can't control anything. You just enter the markets who are in uptrend and exit the markets that come into downtrend. It's as simple as it is. But yeah, people want to make it complicated because they think, oh, if I do something complicated, then only I deserve the money that I get or deserve the award that I want. But this is nothing like that. It's You're not building a spaceship. You're not doing any job. This is investing and trading. You're just buying and selling. It doesn't have to be complicated. It can be as simple as you want. Let us get back and look at the examples. Well, Asian Paints, you can see it's an uptrend, 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 uptrend. You can see this or this. Until and unless that is broken, it is still not in a downtrend. And you can see it is just hovering over there. Once it goes like this down, then maybe we could say yes, it finally entered into downtrend. But till now, it's still in an uptrend. Let us go to my other watch list, which could be okay. This is AU Small Finance Bank. These stocks are on my radar so that I could buy in next. But you can see up, down, up, down, up, down, and finally it is giving a breakout above the up. That means it is still continuing in the uptrend. So in future, I personally, this is not a recommendation, but I would personally want to buy this as a long-term investment. There is next, which is Biocon. Well, Biocon also we can see up, 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 up. And once it tried to go below this, now there is a high possibility that either it will go here or here. Now, because it broke the previous higher low, I would not be interested to invest in this unless and until it again goes above this, as it went in the previous example. If it goes above this, then that means it's still continuing in its upward trajectory, and that is when I would actually want to buy some of Biocon. Next, let's see Bata India. Well, we can see Bata India has actually turned from an uptrend to downtrend. This was the previous higher low. You can see the price has clearly gone below it. So there are higher chances that the price will continue going down. Unless and until it crosses its all-time high and starts going up again, only then I would buy Bata India, or else I won't touch it. Next is MGL. MGL also you can see it is in an uptrend. It went below, it went above the previous high, and now it's there, so it's a good time to buy for me. This is personal. Personally, I would be interested in buying MGL. This is not a recommendation. Please consult your financial advisor. Then comes Natco Pharma. Well, that also we can see is in a healthy uptrend. So unless and until it goes below this, it's a good uptrend. Then comes City Union Bank. Well, City Union Bank also is in an uptrend. So unless and until it goes below this, it is still in a healthy uptrend. Though it may look something of a sideways market over here, but you can see overall, if you zoom out, it's still in an uptrend. So I hope you get the idea of how to spot the trends, and you have to always sit with the trends, and that is how simple it is to make money. Never go against the trend. Trend is your friend until it bends. Happy trading.